What's up, you guys, and happy Wednesday to you all. Today is September the 26th, and today I'm going to go over my target position. As you all know, I have been entering and trading that position since Thursday. I was selling puts at the 115 strike. The stock was trading right around 117 at the time. Ever since then, it's been a pretty tough trade. So let me go over that trade and kind of share my thoughts where we're currently trading at 109 and what I expect moving into the future of this stock. So overall, today was a pretty tough day in the markets. I was watching other retail names like Nike, Foot Locker, Dick's Sporting Goods, Kohl's, Walmart. Everybody was holding up pretty good for the most part. However, Target late in trading came out with a news clipping about closing stores, and the stock basically lost its footing from 110 and dropped all the way to 109, another new 52-week low. The funny thing about Target coming out with this news about closing stores, everyone took it as terrible news. But honestly, a lot of these locations, if you actually dig in the data, these locations like outside of San Francisco and Portland, Oregon, where crime has been pretty rampant lately, it's actually not a bad thing. And here's why. But here's the funny correlation. If you look at Walmart, not too long ago, actually in May, they reported closing 23 or more stores across the country because of the same issue Target was having to deal with, which is theft and shrinkage. And if you look at the chart, and if you look right here in the chart, right here at the tail end of May when that article came out about closing stores, the trend has been nothing but up for Walmart. Interestingly enough, Walmart is trading near its 52-week high since May, and if you compare it to Target, it's at an all-time low, at a new 52-week low as of today's trading, and they're both retailers, albeit Target might be a bit more discretionary with some of the VITs offerings. And one other point I should mention, if you look at holding Walmart stock, you're going to get a forward dividend and yield right about 1.5% if you want to be a Walmart holder and long. But coming back over here to Target, if we look at its 52-week high and its forward dividend yield, you're able to buy this retailer at all-time lows, as well as you're going to get almost a 4% forward dividend yield at this basis. But hear me out, guys. I understand if you're looking at this chart right now, you're probably saying to yourself, that is an ugly chart, Matt. There's no way I would want to touch that stock right now. But hear me out right now, you guys. We are going in the highest grossing quarter for retail, especially discretionary in a holiday shopping season. And if you look at an RSI chart, which is the relative strength index for companies, right now, Target, if 30 being an absolutely oversold, 50 being neutral, and 80 being way overbought, case in point, if you looked at a Tesla, an Oracle name, you'd be well above 60 or 70. Look at Target up here. It's at 22 as of today's trading. That means there is absolute fear. People are panic selling. This is so beyond oversold. And last time I checked, you don't make money in the stock market by buying high and selling low. Is that right? And like always, only in the stock market is where you see people go, man, that's a great name, a great company for an awesome price. We should probably stay away from this one. But yet those same folks will come over here to Walmart and be like, well, that's a safe retail name and something that we trust. Believe me, I shop at both Target and Walmart, but this is not what you buy here. You buy Target, not Walmart. So in closing, I want to leave this with you guys. If you're currently in Target and you're like, man, I can't take this, it's driving me nuts, I feel sick to my stomach, I'm down so much money, Matthew, let me just share this with you. I'm in the trenches with you. It's not been fun. I've jumped in since Thursday. There's a lot more people that have been at 120, 130, 140 that are really getting crushed. No matter where your cost basis is, when you're down in a stock, but you truly believe in the name, it's paying a strong dividend, it's got solid margins and good growth potential down in the future. Remember these things, because the hedge funds and money managers are crunching you down to the point where right when you're about to give in and give up, that's when they're going to cover. And they're going to make a fortune off of you. So just remember that. Here is the last example I'll share with you. I was in the airlines at the start of the year, December 2022. Everybody from CNBC to anybody who trades stock around the area that I talk to go, why are you in airlines? That is the stupidest trade you could be in, Matthew. You know what? Let's take a look at that chart real quick in American Airlines. Do you see right here in December, right over here, in that big giant gap up? I made 40% in that position. I was down, but I got it all back, plus 28% more to start my year in 2023. The reason my portfolio was up as high as 85% before this move in Target is because I weathered the storm. I could handle it emotionally. If you've never taken a behavioral finance class, you should consider taking one. There's a lot of state schools that will offer it. I'm telling you, you have to weather your emotions when you're down in a trade, because this is where Wall Street makes a ton of their money off of Main Street. So right now, the RSI is telling you it's oversold. Right now, if you look at the chart, it's an ugly chart, but given the RSI is showing you that it's oversold, the stock has already had a 3 standard deviation move. There is a point where this stock will rebound. You will see a reversion to the mean. You got to hang in there, because if you miss this reversion, guys, there's no coming back. You'll just kick yourself even more, like, damn, now the stock's back up 10%. There will be a relief bounce here at a certain point. You're waiting for all of the money managers to cover and get into this position. I'm telling you, we're moving into holiday shopping. This is the time to get into these names. They will bounce back. But sometimes you got to stomach a little pain in order to enjoy the gains that the stock will give you. I hope that you found value in this video. I'm going to be in this trade for a little bit longer, probably much more longer than I expected. But I am okay with holding this stock because it's going to pay me 4% forward yield. And at the same time, I've got a Christmas shopping season, albeit all of the other variables with student loans coming back in, consumers tapped out. I get all that, but people are still going to spend money and enjoy their holiday season. So just keep that in mind. Thanks for watching. I'll see you guys on the next one.